Hope everyone's doing really well today. It is the 19th of October 2020. We are getting really close to the election and some big fundamental aspects coming into play. Let's look at how they're going to affect the markets. So the total market cap, we had a sideways week closing right below the previous ranges POC. So not much action last week. Nothing much has changed. If we go down to the 4 hour, we can see more closely what zone we have. This is the zone that I've highlighted as the support zone. Very clearly these anchored VWAP resistance bands, which have now flipped into support, are still clearly the support zone. I would say that if we do break down below this and start closing below the monthly open, then we would be looking at a higher time frame range. In fact, being in danger of not only challenging but even breaking these lower levels, because of what price has done. For a bullish narrative, this is the zone that really needs to hold as support, and on the other end to flip as resistance. You can see this. First of all, we are failing to close below the above the range POC. So this is the big range for now, which has been distribution, but it has been reclaimed. You can see this H4 level, which acted as support and turned into resistance, has flipped into support again. So we have quite a decent amount of confluence here for support. So I would say if price does come down into this zone, it is a great place to manage risk for further upside. And I think the point of negation is this monthly open. For a confirmed upside, I would say that we need to break this H4 level 366 and flip it into support, because you can see how little time price has spent as support over here. We've had a couple of pretty strong rejections as soon as price did go up above this H4 level. So still there is time for what we are seeing before us to pan out. But nonetheless, we have very cleanly broken up from this prior consolidation of September, and this is bullish until we break this support zone. So this is basically a breakout of a potential double bottom with a retest. Very clean, lot of confluence here to manage risk, and we get a further confirmation once price breaks above this H4 and flips it into support. It's very similar with the altcoin market cap. Don't need to delve too strongly and too deeply into it. We have a similar scenario, except that alt BTC, since we had looked at it from the beginning of October and looked at seasonality and looked at the decent probability that alts will remain weak, you can see this chart is reflecting the same, because you saw how far below price the monthly open was for the total market cap, and we are very close to that. For the altcoin market cap, we do have this support resistance flip and prices right on it. I would say that there is another probability that you can, while the total market cap, if it does dip, altcoin market cap can dip slightly deeper into this band of anchored VWAP support. But beyond this, I think if this is breaking down, then it's not so bullish anymore, because similar to the total market cap, we have this potential double bottom, which is absolutely not as clean as the total market cap. So we do have it, and we have price consolidating above it for now. So even if price does have to, I would prefer that it is wick, or we start closing down below here, you would know that price does want to come back down to test these lows. They have been tested a lot, so it is quite a dangerous proposition. But if we did get in early, so this is nice because you would have been able to manage your risk up here. If price does come down, you can be closing your longs at profit and looking for another setup below. So still, I would say altcoin market cap similar to the total market cap, but weaker, since all BTC has been taking a hit on this BTC sideways consolidation. Here we're looking at Bitcoin on the weekly, and I want to just highlight this key weekly level. Just look at this block over here on the weekly time frame. All right, so this is such a key level. Just look at our reactions. Once prices did break down from this 22nd January weekly block, we just have not had any weekly closes. We basically had 1 week where we closed above, but when we look at weekly blocks, we should be looking at the wicks as well. When we're looking at it as resistance, you look at the wicks above, and when we're looking at it as support, when we're looking at it as resistance, you look at the wicks above, and as support, you look at the wicks below. So here you can very clearly see we have had no weekly closes above here. So in terms of the point of control of this higher range, I mean, we are still at the near the middle of this block. But really, if you want to see a confirmation and for price to really move beyond this, heading towards higher levels, 12,800, 13,880, then you want to see price moving above this. This will be the real confirmation. Yeah, early confirmation if price is finding support above the range POC. Later confirmation if a weekly can close above this, the top of this weekly block. You can see very clearly we have had no weekly closes above this big level, and it has been 2 years. It has been more than 2 years now since price has just been struggling below here. What is positive is, yes, that we have found support at a very high level close to 10,000. You can see that price has not done that all the way since we had the breakdown in 2018. The price has not found support at such a high level. We are going to confirm it once BTC ends up trading above this. On a lower time frame, just quickly look at the 4 hour again. So on the 4 hour, here we had this support resistance flip. This is what we were talking about last week. Got a very good reaction from there. It was straight down into this level, and it was a good $520 move right out of this level. So the most ideal scenario, if price does have to, it can come right back down here again. But trading below this anchored VWAP and support confluence would not exactly be so constructive for BTC. Would be suggesting price wants to do something else. But most ideally, you can even get another flush, get people out 11,100, even 11,050 around this zone, get a wick, and then for price to move up. If you're looking at fibs, just quickly look at this entire move. Also see if we can find some other confluence over here. I'm just gonna pull out some fibs. So in terms of confluence, we do have confluence like a 0.3 and a 0.5. So we have fib confluence right here at this zone as well. The rest of it is further down below, and I would say that is not going to be so constructive for price, because the total market cap would possibly lose that support band. That is what is cleaner. That is what is cleaner than even what BTC is doing. But if you look at it, even this support resistance flip on BTC is quite clean. Support, resistance, and back down as support. So if price is breaking below this, it is not so constructive. Losing this support zone would not be so constructive. What is interesting is that we had a lot of FUD here. This is the BitMEX FUD, or if I'm not mistaken, this is the BitMEX FUD. But we've had a lot of FUD here. We've had a lot of FUD here, but price is really not reacting. So you got to put two and two together. There's a lot of liquidity getting generated. The last time we had FUD here, I was talking about it. Do people not think about it and understand why we have FUD at the bottoms? And why do we have people shilling near the tops? It is to generate liquidity. So they had been selling that time. There was pretty logical acceptance that this liquidity got absorbed. I tweeted about it. Also, the absorption, it was clear CVD divs, and we got a golden pocket retrace. Fantastic move out of here. This is basically what we were looking at a couple of weeks ago, and we got a fantastic 10-11% move right out of this golden pocket. And basically this was the BitMEX FUD, starting of October. You can see how it got absorbed. It was just a lot of selling, but price didn't even come down to test these lows. So it did move very technically. BTC has been moving technically. You can see a golden pocket after another golden pocket, and a strong move out of there. So it's a very technical move, guys. And if people are confused about what is happening with price, I think they're just not looking at technicals. So this is the first move. Possibly what we have seen now is the second move out of there. And this time you can see, if we measure this whole move, it is a very shallow retrace, not even a 382 yet. So we can get that 382, but the potential for the third wave out of there. So this is one, this is the second wave, got a shallow retrace and get another move. If you're talking if we're talking in terms of Elliott waves, that would be the fifth wave. So that's the first, second, third, shallow fourth. We got this law of alternation. There's a deep pullback, shallow pullback, very different in terms of the way price has pulled back. So there is a probability that this can hold, maybe take out the lows once before moving, but technically it would not be constructive if this level cannot hold. It's not entirely bearish. I mean, a bearish setup, I would say, is once just look at the total chart. Essentially that would mean BTC starts to trade below this quarterly level. I think that is what would be dangerous for the bulls. But any dips into this zone is definitely very nice place to manage risk. Very clean, and multiple points of confluence right here for BTC. And in terms of your confirmation for upside, you want to see price flipping this level 11,730 into support and getting a weekly close above the top of this weekly block, where price since 2018 has not gotten a weekly close above here. So that would be very, very constructive, and we can really be looking at higher time frame moves out of here. And I mean, just in terms of clean and pure technicals, there's another BTC chart that I want to look at. I'll just show you that. Just to look at the 2 weekly chart on BTC, a very simple chart. It's a big move, consolidation. You can see a 210-day consolidation, and we got a breakout led to a solid move again after this big move, consolidation, this time longer, 700 days. That 700 days from the time we hit the top till the time we got the breakout, and you can see this time it has been 960 days. So the consolidations have been longer, nonetheless they have been quite clean. So you can see that this is quite clean as well. We've had that breakout and a retest, so these consolidations have been quite clean. And for now, I think there is no bearish scenario. There's no real bearish scenario unless we start breaking down below this previous consolidation level. I think if price is going to do that on this higher time frame, then BTC is not doing what we are looking at. But for now, all the signs are there. Everything has lined up. This bi-weekly chart is reflecting it as well. We looked at the weekly close. You could see that there was big resistance. But if you look at the 2-weekly chart, you can see that the week of 3rd of August, that was the highest weekly close we had since the close of December 2017, which made the BTC all-time high. So this was a pretty high weekly close. Since then, I would say, of course, we got in the downtrend. We had two closes which were higher, while price was moving down. But you just look at what we did in May, and we have on the bi-weekly chart suggested where price is moving, because we don't have that big resistance zone on this bi-weekly chart. But nonetheless, this is what I wanted to show you, that we have broken out of this consolidation, even technically retested it as support. So quite a few factors that are lining up for Bitcoin even on higher time frames, which is positive. So traditional markets, again, we're looking at the presidential election, and what you can see is again a similar objective and perspective that we have spoken about over the last 2 to 3 weeks. This time we're also including the dollar index, right? And what are we looking at? A weak dollar and higher stocks. They bode well for the incumbent party, while the opposite supports the challenging party. How many times has this been correct? This is basically 1, 2, 3, 4, 5, 6, 7. 7 out of 7 times since 1972. That's not so bad. When we had a weaker dollar and stocks going up the last 3 months before the election. So currently the dollar is right on the edge, so things are still a little bit in the air. The stocks, I think, pretty well up by 5.9%. And what we are seeing right now is conflict between both the parties in terms of what policies. But what I will tell you is that both of them want the stimulus to be released, because what you have to understand is this may be a narrative or this may not be, but the facts are that if any of the parties becomes the reason why the stimulus is delayed, it can be heavily used against them, in the election, because the election is the time where all the power is with the people, and right now the government has with it the power to spend people's tax money on them to basically get votes. Basically they have the potential of buying votes with the people's money, so I don't think it would make any sense for either of the parties to let this opportunity go. What I would say is, yes, it does support the president a bit more. It does support Donald Trump a bit more because he is the current president. It is his government that would be sending out these checks. So in that sense it does, but I don't think the Democrats have any choice, because if they would hold back till the elections, this can be used against them. Even holding it back or delaying it any further will be used against whoever does it. It has been politics over the last week to 10 days. The stimulus was being expected earlier than it was, but it is possible that it is being delayed, or it has been delayed so that it is fresh in the people's memory. So because it would be fresh in the people's memory, whatever they would do in the near term is what is most important. The elections are right around the corner. So this is something to keep in mind. It is in the interest of both the parties to approve the stimulus, and that would affect the market. That would drop the dollar further, and that would take the numbers to towards uh, towards the incumbent party having more strength. So this is something that we have been looking at, but we are adding the dollar into the mix, and also we are talking currently about what may potentially happen over the next week or so. We have I think it is the World IMF meeting that is today. There's Fed basically speaking all day from about 7 a.m. Eastern time all the way to possibly lunch or the end of the closing bell for the market. So I think even just today might be a very key day on what might happen. But I mean, this is why you got to be a bit careful in the markets right now, because it is so political. They have just forces, the Republican or Democratic forces, which would just define near-term price action. In terms of higher-term price action, there are a few things that we will look at, which themselves on their own, just the technicals, just the statistics, they suggest positivity, they suggest bullishness, and they suggest for a potential to be looking to buy dips and to be looking for further upside. We spoke about improved breadth, and you can see this again on this chart. It really suggests that we have very good technicals supporting this market, because we had this big pullback, and right after that what you want to see is not only price getting bought up, but even the weaker sections of the market reflecting strength, and that's what positive breadth like this suggests. We have 89% breadth after the pullback, wherein this is 89% of the stocks above their 20-day moving average on the weekly time frame. So that is very significant. That is high time frame, and this is the kind of technicals you want to look at on pullbacks in bull markets. So there is nothing right now that is suggesting that price has to do anything otherwise. I would say that this is the line in the sand in terms of a support and resistance level. Technically, this 3200 zone, if this is holding in prices above this, it is very positive for stocks, and with such broad market participating, there is no real reason to actually be bearish or to be looking for a downside. This is the kind of market where you're looking for pullbacks, to be adding to positions, or to be finding the optimum places to manage risk. On the S&P 500 chart, currently that is the 3200 level. That is where one needs to be managing risk from. But we're already making higher highs and potentially higher lows over here for what is setting up to be a possible continuation. So here's another positive bunch of statistics for the market. This is the semiconductors. You do know semiconductors are used in most electronics, and a strong semiconductor index really reflects a strong market. So semiconductors have been leading the way up. I did mention it last week as well, but what else we want to look at is basically when semiconductors year to date through mid-October have a return between 25 to 50%. You can see how many times we've done this here. 1 2 3 4 5 6 times in the past that we have done this. You can look at the rest of the year, you can look at the 3 months, and you can look at the 6 months. This is all positive. 6, I think, for the stock market, still maybe a smaller sample size, but nonetheless what it suggests is that when the leader in the market is leading and it is reflecting such big strength, this is very big strength, a performance of 25 to 50% all the way till mid-October year to date, that is very, very big momentum, that is very big strength. And you can see actually the periods where price did that in the 90s. I mean, this is basically the big run up and the bubble, but you can see how strong the market was when price was doing that. The only time we did get this sideways kind of movement is after the, I think this was the 2009 crash. So you can see we could potentially do something like this, because we have been mimicking what price is doing, but nonetheless you can see that there was still strength in the market. It was what you can build as a channel. This is slightly like a rising channel, but this was not bearish in any kind of way. And even here we did have positive returns, even if not very very big, but over the next 3 to 6 months there was positive returns. So there's just stats after stats that are piling up, that are suggesting that there is big momentum, there is big participation. Historically this has been a great time. So I mean, technically this is what you use, and you use this to possibly form a bias, but you're not basically going all in. You have to still have a strategy where you are finding the most ideal places to manage risk. So on the S&P 500, I did show you that was the most ideal place to manage risk. Apart from that, this is what we are looking at in terms of what could potentially happen. So we do form a range where price goes to near the top of the range. We start finding resistance there. We can build out a channel like this. So every time price is getting close to 3200 to 3300 on the S&P 500, I would say 3200 to 3250, that would be a great zone to be managing risk. On other assets as well, you time them and you chart your individual assets. But basically, even if we build some kind of a long-term floor like this, it would be very positive, and you could easily take these swing trades for which last a week or two for upside. But remember to take profits, because we've already had that big move where most big names have made 100% plus moves. So the market can only give that much. I mean, this is, I would say, considering what has happened since March, this is late. So when it is late, you still have to be cautious, and you still have to time your entries really well. You can't just be like, oh yeah, the market's going up and let's just go all in. You need to time your entries, because if you time your entries in any of these places, great places to have gotten into the market. But there is danger always if this is where you are buying, right on top of this channel. So just remember that you still have to be patient. You still have to wait for a dip, to actually get a decent timing to catch the bigger moves. But anyways, we have broad market participation, leadership again showing great strength, and great opportunities. That's what I would say, great opportunities. So we've just had what we call the Amazon Prime Day. You do know we had that very recently, and I would say the entire market had its eyes on the numbers over there. But what this market is suggesting is what it is, and I've been iterating it from quite a long time. The retail sales are hitting new highs, of course, because there is distribution of so much liquidity and capital. But Prime Day sales have not been disappointing, and it is supporting a further move for the market. Just look at the recession period, and it is what it is likely suggesting that the recession is over. The money mechanics are working like that. The Fed has bought themselves out of another potential recession, and now 2021, I would say, potentially could be the place where the fundamentals catch up with the technicals and we get that potential consolidation. But for now, this is on the ground numbers of sales, and this should reflect what the market sentiment is. Yes, there is unemployment, there is still a lot of insecurity amongst people. The virus is still infecting and the virus is still spreading, but that has not stopped the spending, because the money is infused into the market, and essentially spending is what drives the markets, so regardless of what is happening outside of that, there is the potential and fundamental driving factor of the market, which is still significantly alive. So another suggestion that still there may be another potential move coming for the market before we get another bigger consolidation. Here we have another chart which has the timing of the elections involved in it. So you can see this is the Russell 2000 ETF, and you can see the last two boxes are places where we had our elections. So you can see technically how it's been very interesting that price has been at resistance and very near to a potential breakout, very close to both the elections. So again, sample size is only 2. It just looks nice when it's on a chart, right? It is lining up. There is potential for this, but like I said before, either you are buying breakouts or you're buying retests, but you're finding the optimum places to be managing your risk. You can't just be hanging midway. Either you're buying a breakout of a multi-month resistance, or you're finding places where there is support. Here, just look at the support right here. Very clean support zone, great place to find an entry. So it's a very clean resistance zone. You get a breakout entry over here, well and good. You get a breakout and retest, well and good. But this is the kind of places you need to find to manage risk. You can't just buy in the middle of nowhere and have no place to cut your trade. You need that risk and reward ratio. So just keep a lookout for that. But the market is giving you a lot of signs to create some kind of bias. That's all it is. It's not an all-in situation. There should never be an all-in situation. It is just find a place to buy the dip, find a place to manage your risk kind of situation. That's what it is. The broad market is like that. Metals are the same. I would say it is so dependent on the dollar right now. Everything is so dependent on the dollar, including a lot of hopes of the elections, a lot of hopes of the people. A lot of narrative is just built around this thing. So it is possible. Again, there's no sureties in the market. That is why we need to find places to manage it. It is possible that the entire market and the move of the dollar may already be priced in. You have to understand, we have had 100% plus moves in a lot of names since March, in the 6, 7, 8 months. It is now only the crowd is only catching up now, which is why we're getting participation in breadth. Market breadth is getting better because a lot of the crowd is catching up. A lot of the cash which was just sitting on the sidelines. I have spoken about this in many multiple reviews all the way in March and April, early May. I was talking to you about all the cash that had been scared money, that is big money. It is basically your 70 to 80, 85 year population in the United States, which is a bulk of the money of this country, which was just sitting out and afraid. And the market absolutely cornered them because they were sitting out in cash, and the dollar just dropped like a rock, and the assets just repriced themselves. So that's what happened. But that money which was sitting out, after these technical improvements that are coming in, it is coming in now. It is at a big premium that it is coming in. You look at this is a big V bottom. So they've missed this entire move. This on the Russell, it's possibly 35 to 40% move. They have missed this entire move. So this is where it's coming in, but the technicals are supporting it. So what is safe money? It's not necessarily that it is not smart. money. There's just certain times in the markets where the demand is overwhelming the supply. It just happens. And even if it is late, there is a trend, there is so many things that are supporting being okay to buy when it's late. But what I would still say is that since you are a technical analyst and you're watching this, you still need to find that technical level where you could be buying. It's not that, oh, okay, everybody's buying and market is moving up, momentum's good, let's just get in. Find the area. Just look at this was a great zone to manage risk. Find another place. A breakout and a retest is a good place to manage risk. So that's what you need. And outside of that, this is what it is. It is just a lot of the money which was on the sidelines is now hopping back in. And it is because of all of this. What statistics we have, these are the statistics that the hedge funds are showing to their clients. They're showing the improvement in breadth. They're giving the reasonings for why they need to get back into the market. They're giving the reasonings for why price has potential to carry on. So you have to understand why there is still plenty of demand. Even after the market has outperformed, the market did the same thing. You do not have to just stick to your bias and be stuck with it, because the market did the same thing in 2009 and 10. We had already made big moves, but it was further continued with another move and then a consolidation. So if you watch the macro review, I did speak about it. There is a potential possibility of getting some kind of consolidation in 2021. But beyond that, if you're looking at the macro picture, there is so much that points to a continuation of this 100-year bull run, of this 100-year market. So this is where we are in that situation. I would say we are still in that that initial impulse, which could potentially have some more legs before we get another reconsolidation and further continuation from that. So the money is still pouring in, guys, and if the government carries on, if the Fed continues to protect the people, it is possible that we do get a further improvement in breadth and a continuation in price, which the statistics are suggesting. For our commodities, we're taking a quick look at silver, and what I would say is that currently we are consolidating. This is a potential consolidation. This channel is quite lean. It has been working pretty well. For we have a support band which is right below where price is. We have a resistance band, and again, like BTC, we had consolidation in August, which price broke below, and this could be distribution until price finds support on this resistance band. And I would say that is what is necessary. That would be the place where one would be looking to compound and looking for higher prices if this potential and previous resistance is flipped into support. So silver hasn't done it yet, though it has made positive strides on the way to what potentially could lead price to do that. So now we are trying to consolidate above the monthly pivot. You can see the monthly pivot has been quite high, and price has failed to hold it as support. So the monthly and the weekly pivot are quite close by. They have confluence of the middle of the channel. So what you would like to see is for price to start filling up this gap right here, finding support and getting that breakout, and giving you another place to compound your trade for further upside. But it is looking constructive, and it is looking for now what potentially could be. For downside, I would say the loss of this channel would then trigger a potential scenario for downside towards this quarterly level, or at least first these lows. So this is the primary scenarios looking at silver, and So I'm just trying to switch this color. Sorry. So this is the primary scenarios I'm looking at for silver. Now, potentially still with a bullish tone, but so much of the market, like I've repeated before, depends on the dollar. You start seeing some positive construction on this chart, you could be thinking price comes before news. So this would lean towards, this green trajectory would lean towards that potential printing by the Fed and the potential approval of the stimulus. You start seeing price break below this channel, break below this support band, and you could know something fishy or a delay is coming, and we have some different projections from there. And but for now, constructive and looking for this potential continuation of this move. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!